All right. Welcome back, everybody, to Altcoin Daily. My name's Austin. I want to share with you some concerns I have regarding traditional markets. And hey, that may seem crazy to you because we're having a great day in the stock market today. This last month, the month of April, we saw the best April since 1987. If we look at the last 6 months, we've only seen higher highs, higher lows in this recovery. But there are certain indicators right now that are signaling that I want to share with you that the party may be over. Today, I want to clue you in on what is really going on a macroeconomic level for traditional markets. Now, with Bitcoin, I could not be more bullish on Bitcoin right now. And it's one thing to say it, but in this video, I'm going to prove it to you. If traditional markets tank, if they tank hard, everything gets pulled down with it. But having a decentralized, trustless, censorship-resistant, fixed supply store of value / asset, that's valuable right now, at least even just having a piece of it. But my concerns for the stock market are as follows. And it may not look like it to you right now, but we are technically in a bull market. But there is an opinion going around right now that stocks will crash lower. Here's exactly when to expect it based on the trends. Because many exuberant bulls of the stock market would have you believe that since the S&P 500 is now more than 20% higher than its mid-March low, that satisfies the semi-official definition of a bull market. So just based on a technical definition, this is bull territory, baby. I mean, we hit this March low right here. We hit a low in March, and we've kept going up. But based on historical analysis, while the market's rally since its March 23rd low has been explosive, it's not unprecedented. Since the Dow Jones Industrial Average was created in the late 1800s, there have been 38 other occasions where it rallied just as much, if not more, in just a short period of time. And here's the kicker. All of them occurred during the Great Depression. So the last time we saw this sort of just such fast explosiveness in traditional markets was in the middle of the Great Depression. So what's the point? Well, considering the bull-bear market calendar maintained by Ned Davis Research, according to it, there were no fewer than 6 bull markets between the 1929 stock market crash and the end of the 1930s. So this is a chart of traditional markets from 1928 all the way till 1954. But if we just take 1928 to the end of the 1930s, right around here, there was technically 6 bull markets at the time. But by the time we got to 1942, we were higher, just not that much higher than where we hit the lows of the Great Depression. So the point is, even though we're seeing the last 6 weeks, some of the best weeks the stock market has seen in decades, we're in a bull market, technically. I doubt an investor interviewed in 1939 about his experience of the Great Depression would have highlighted those 6 bull markets in the middle of the Great Depression. If you're interested in reviewing these metrics more, there's a link in the description. Hit the like button if you appreciate this sort of research. And by the way, some people might disagree. Starbucks is set to reopen all stores today, technically yesterday. But companies in commerce, just like they were told to sit out by choice, they are coming back. They're opening up by choice. And the government right now is helping out way more, taking on more debt, printing more money than they ever did in any economic downturn we've ever seen. The U.S. Treasury to borrow an additional $3 trillion in 3 months to pay for this pandemic. So it is different. And as such, you should be acting differently. The Bitcoin halving is in 6 days. 6 days, the third halving ever. This massive debt that we're putting on, this massive money printing, it's just kicking the can down the road for fiat money, for the government. This is why I'm bullish. But my biggest concern regarding the stock market of 2020 is thinking that the stock market right here, thinking that the consumer demand right here will be equivalent to what we saw when things were popping off for the last 10 years pretty much, will be equivalent to what we saw here, I believe is a misconception. And my reasoning is as follows. Right now, as stores open back up, as companies, as commerce opens back up, there are haves and there are have-nots. I think this morning, I think Jim Cramer really hit it on the head. And believe me, I don't trust him when he talks about specific stocks or even specific timing of big macroeconomic events. But in this case, I really feel he hit the nail on the head. You let me know in the comments, saying that digital companies that aren't necessarily affected by social distancing the same way, let's say, airlines or movie theaters are, they're going to thrive. But thinking that the economy is going to be the same as what it was a year ago is a misconception. Listen to this. Let me know what you think.
This is one thing that people have to understand. There is no issue at Facebook about social distancing. There's no assembly line. Assembly line, the productivity is going to be hurt so badly by honest social distancing. Yeah, look, I've got to tell you, Tyson was on yesterday. Who knows what kind of distancing they were. I'd really like to have some. We need some tape of what went on there. But when you look at Baxter raising the dividend by 11%, there's no social distancing. And social distancing is going to be the answer to why you have to sell certain stocks. I mean, what is going to happen on a cruise line? I mean, there's a GQ article out about Carnival, and the idea of Carnival is you get together, you meet, you do things together, it's fun. I mean, togetherness kills. I mean, that's what we think now. I mean, I want to see my wife this weekend. I haven't seen her in a while, and I don't know. I mean, N95. What do you think? The N95, David? Was that the good one? To see her? Can I use one of those paper ones? This is a 3M N95. This is going to be great for Mother's Day. This is a Mother's Day bonanza. And I got one for her. We'll wear his and hers, N95. Tough to come by.
That's very romantic. That's
David,
very romantic.
David, my whole relationship's romantic, so why shouldn't this be the same on Mother's Day? Based on this, David.
Nothing says love like an N95 mask, I think. I think that really is a true statement.
Yeah. Higher worker comp, because you gotta pay these people to come into what is a hazardous job. Higher safety costs, obviously, just the PPE cost, the testing cost, and then inefficiencies that come from social distancing. I mean, on a cruise, it's not an inefficiency, so to speak, but certainly if you're trying to debone beef or pork, it is.
Well, I mean, I know I spoke with Tyson, and Tyson would tell you they're doing everything right, and they obviously, people go to Tyson and they may get COVID from their community, and there's lots of different reasons why you may not be able to make it safe. But the issue for me is, if to make it safe, you kill the profitability. And if you're investing in something, you don't want to sit there and think, okay, how dangerous is the company I'm investing in to its employees? I keep coming back to the haves and have-nots, these companies that are just doing so well because there's really no danger. And then there are these companies where it's like hidden danger, where you realize, wait a second, it's a franchise-based company. I mean, not Tyson, but there's a lot of companies like this. A franchise-based company where the franchisees rely on bank financing, and suddenly the bank isn't really interested in extending, or they can't cover their costs because they're closed. And you've got this really bad chain of events that's going to occur for a substantial part of the S&P. And then there's another part that is just fantastic.
Okay. I like it. The point is, we have seen different times in history where the stock market thrives and then gold thrives. Stock markets popping off, and then people realize, okay, we're overvalued. We need to find a harder form of money to store wealth. We can see right here, since about 2014, 2015, the S&P, the green, it had its day. We can see from about 2007 to about 2011, 12, gold had its day. These things oscillate. And my concern is for people that are really over-leveraged in stocks right now, even if 80% of stocks come back, that's still 20%. 20% compared to the 100% we saw before that are starting to divest, and put it in gold. Put it into something that's a harder money. Now, what is the hardest money? Well, you tell me. Hit subscribe. I have a few more pieces of news for you, but hit subscribe if you appreciate learning, if you appreciate growing. But to update you on our little battle we have right now with the YouTube algorithm, because look at this right here. YouTube is censoring videos that have Bitcoin or cryptocurrency in the title. It's not just us. It's 5 to 10 of the biggest crypto Bitcoin YouTubers on YouTube. And look at this. A video starts off strong for a few hours, and then for 6 to 12 hours, completely censored. It's gone from your subscription feed. Even if you type in altcoin daily in the name of the video, it will not show up on YouTube. And then 12 hours later, they let it back. Killed all momentum, but they let it back in the open. Obviously, YouTube is so big, I don't think they're doing this on purpose. I truly just think we're getting caught up in the algorithm. But they responded. They did respond on Twitter. They said, thanks for reaching out. We've seen similar reports, so we'll pass yours along too. You'll hear from us when we know more. Hopefully, this will lead to something. I'm going to leave this link down below in the description. If you're feeling it, just go there, like it, retweet it, just a simple little poke reminding them that this channel is truly just educational and will comply. If we're doing something wrong, at least we want to know about it. So a little poke. That is the video for today. My name's Austin. See you tomorrow.